Have you been on your way to a trip and realized in the process that you forgot something very important? That's the same thing for a lot of business owners. So, this episode, we're going to talk about important dates and events that you need to have and be mindful of for your business to be successful in 2023. Stay tuned for this week's Tax Tea, where we talk about a man who's been convicted of committing COVID-19 fraud. This and more on Stuff Your Accountant Isn't Telling You. Welcome back to Stuff Your Accountant Isn't Telling You, a podcast where we tell small business owners secrets and strategies that big businesses are using to increase their profitability. I am Lola Turner, your host, and I am joined by Mr. Terrell Turner, my amazing host. Welcome, Terrell.
Hey, thank you for having me back.
You're welcome. Excited about this episode 32. But before we jump into the episode, how are you doing today, Terrell?
I am actually a little tired, but I am good. Been working on some projects for some clients. It's December the 29th. So trying to close out the year very strong for some clients and cleaning up some stuff so they can start 2023 off on the best foot possible. But
Yeah, that's
how are you?
important. I'm good. I'm good. It's been I don't want to say like a long week. It's been a long couple of weeks, I guess, but just the excitement of, like I think you said, just wrapping things up for the year. And I think just kind of getting into 2023, kind of hitting the ground running. So I'm excited about the year, and I think I'm just excited about the great information that we're going to be sharing with business owners to get them ready for the year. I'm genuinely excited about that. So, yeah.
Absolutely. Yeah. I mean, and I think about kind of as you did the opening is something that people ask me about, like, what is this show about? Like all the content that you guys create. And, it's something that you and I talked about is like these, these are the types of topics that are helping small business owners implement some of the same secrets and strategies that big businesses are using to drive profitability. And I think today's topic is so much, so valuable because I remember when working at major companies and corporations, you had entire departments who were dedicated to remembering some of these important dates and these important events. And if we didn't actually achieve those or participate in those events or hit the deadlines, like it was going to be a pretty catastrophic event for the business. And when I think
Yeah.
about small businesses, they don't always have the luxury of having those dedicated teams to those dates. And then also a lot of times they just don't even know that those dates are important or the types of events that are important. So yeah, I'm excited about this episode as well.
Awesome. No, me too, because I think to your point about just the big businesses, I think other than just having dedicated departments, I think also the other thing with, that's something that a lot of small business owners don't have. But I think the second thing is also just not really understanding for small businesses, missing some of these key events or things like this, or not properly planning for them, puts your business even at more risk than it would like a big business, right? So I think it's even more important to have a clear understanding of these events and of these dates so that you make sure that you're prepared. So yeah, excited to jump into it.
Absolutely. So let's definitely do it. So where do you want to start in this conversation? Because I think there's so much value to be shared. So where do you want to start?
Yeah. Yeah, so I would say let's just go ahead and start with the accounting related dates. I think I want to do those. I want to get those out of the way because I think those are like set in stone, kind of clear dates. Of course, they may vary here or there depending on the time, the year, but usually those dates are pretty concrete. And those dates are related to your tax deadlines or tax related deadlines. So typically the tax related deadlines, in my view, those will vary depending on the type of business you have, or let me say it this way, depending on where you're located, right? So you have tax deadlines on the federal level, and then you have tax deadlines for your city, for your county. Like those are going to vary. So you need to look specifically at your county. But for us, we're just going to talk about specifically the federal deadlines. So, Terrell, when you think about kind of federal deadlines, I know the first thing that probably comes to people's minds are when do I need to file my taxes, right? I think that's the easiest one.
Yeah, I mean,
What are some other
well,
ones?
one of the I would say even before jumping into the taxes, I do think, you know, a point that people should remember about it, whether you have a fiscal year or whether you have a calendar year, like
Hmm.
if you're one of those unique businesses where the end of your year is October 31st, um, you kind of want to have a conversation with your client. Now, most businesses are going to be on the calendar year, meaning December 31st is the last day of the year. And I think even before jumping into taxes, I think it's an important to remember is that, yes, it's December 29th. You can still close some deals between now and the 31st. I do know that a lot of people have taken off for vacation or they're just kind of checked out for the year, but you still got as of right now, it's the 29th at 8 p.m. Eastern Standard Time. There's still at least 2 full days that you can actually close some deals, get some, productive work done in 2022. So I would say is those December 31st is the first deadline date. Um the and to your point, I do think a lot of people do immediately think about the tax deadline. Like,
Yeah.
hey, April 15th. This year, I think since the 15th is like a Saturday or a weekend or whatever, it's April 18th, but they're like, April 18th is the only number I need to keep in mind. And I'm like, "Mm, nah," like, 'cause I used to do that too.
Yeah.
Even when I was studying accounting, like in accounting, they teach you about April 15th. And it's just like,
Mhm.
there's some other stuff that needs to happen before April 15th, especially if you are a business.
Yep. No, I agree, and I agree. I was just gonna make a comment to the point that you made about December 31st. Like you still have 2 days to go get your money. We still have 2 days to make progress. I think a lot of people are just like, listen, it's the end of the year. We pick back again in 2023. But I do agree that December 31st, whenever your fiscal year ends, that's an important date. I think the other date to be mindful of, I know you mentioned Terrell, like April 18th, I guess in the case of 2023 is one date. But I think one other date that people don't remember a lot of times or they don't think about is the dates for paying like your estimated taxes. So, and basically what that means is the day where you're basically saying for Q4 or for the fourth quarter, this is how much I'm owing, and this is how much I estimate based on the money that I made in my business that I'm going to owe the government. And this is the date by which I need to pay that. And that date for 2023 is January 16th. So that's an important date to be mindful of, and I think a lot of people don't think about that.
Yeah, I mean, and I think I would say estimated taxes can just be complicated in general for a lot of business owners because, I mean, in theory, what estimated taxes are is the IRS is saying, hey, if you're a business, you usually don't pay all of your income taxes throughout the year. Like if you're an employee,
Mhm.
it's being taken out of your paycheck, so you usually don't have to worry about estimated taxes. But if you're a business, there's not as much money taken out of your paycheck. And for many business owners, they don't get a paycheck. They
Right.
just, keep a portion of the profits at the end of the year. So if you're in that case, the IRS is like, hey, you're not paying any taxes throughout the year as far as on that income. So we expect you to calculate an estimate of how much money you think you're going to make for the year. And you need to send us a portion of that every quarter. And that way, when they get to doing your tax return, if you have paid within a reasonable range, let's say if you paid 90% of what your actual tax liability is, then you will avoid getting a penalty from the IRS. But if you haven't made estimated taxes, when it is time to do your tax return, you may realize that a penalty is getting added to the taxes that you owe because the IRS wants the money gradually throughout the year.
Yep. No, that's a good point to remember. That's, I think, very important. That's why we listed this as the second most important date you need to be, or I guess in this case, third after April 18th.
Mhm.
The other date was that I had in mind that's also, I think, important is the deadline to submit 1099s and W-2s. So I think that's what, let me make sure I have the right date, January 31st of 2023.
Yeah. Yeah, I mean, and I think a lot of people get confused on, with this because they're like, "Oh, well, 1099s, oh, I don't have to worry about that. I pay my I pay cash or hey, I'm
Mm,
using Cash App." And one of the things that I tell people is that as a business owner, the IRS actually expects you, the business owner, to understand the rules. So if you paid someone for services or even for your lease and your rent, and your landlord, if you have paid them more than $600 in the entire year, add up all the money you've given them. If that is more than $600, the IRS is expecting you as the business owner to file a form 1099 for each of those people that you have paid more than $600. And that 1099 needs to be filed by January the 31st. And then
yeah.
if you've had employees, you need to file all the paperwork so you can issue a W-2 and you can get them their copy of their W-2 by January 31st as well.
Yep, and I wanna caveat the 1099 to where you don't have to issue a 1099 to a company if the company is a corporation, right? Like an S corp?
Yes, and then for the
Mhm,
most part, what I always tell people is, what you want to do is if you're doing business with someone, you want to get a form W-9. So you can go on the IRS website and just search for form W-9, or you can even Google it or use DuckDuckGo or Microsoft Edge, whatever search engine you use. Just search for IRS form W-9, and what you can do is have your vendors fill out a form W-9, because if your
mhm.
vendors fill that out, you will have all the information that you need to know whether or not you need to file the W-9, or if you do need to file it, you'll already have the information that you need and you can just quickly process it. And I think that that's something good to remember, because there are a lot of small businesses that just don't know that you're supposed to file a 1099. Like I remember last year, I was talking with a business owner, and they were trying to get in. They had just started the business, things had picked up rather quickly, and we were having a conversation, and I was just going through a checklist for them. It's like, okay, how are you doing on 1099s? And it was like, oh, what is that? And so I explained what it was, and I mean, the good thing is we met with them in like January, and so we were able to say, hey, we can take care of that for you. Here's the price we'll charge. I think
Yeah.
they ended up having like 30 different 1099s they had to do. But had we not had that conversation, they would have missed that deadline.
Mhm, and I'm gonna say it, those 1099s, getting that stuff done at the last minute is not fun, so I think definitely the W-9 route, having that information filled out every single time you bring on, like, a new vendor, making sure they populate that, because what it does is it makes it a lot easier, like Terrell, you just said, to go ahead and pull that information, so save yourself the time. When you get to the end of the year, you can even have, your accountants pull that information. That information is available in QuickBooks, assuming it was entered correctly, that's the caveat. So, if it's entered correctly, if you registered the vendor correctly, then it should be a quick report pull, and then you can basically use that information to generate your 1099s and send that out, but assuming it was done correctly. So, yeah, that's an important date.
Yeah. Now, I know on the official tax calendar, the next deadline is March 15th. But
Mhm.
I do want to say on the Terrell Turner unofficial tax calendar, um, I do want to put in there February 15th. And the reason why I
Why are
put
you putting
February
February
15th,
15th?
sorry, February 14th. The reason why I'm putting February 14th, is because that is Valentine's Day. And it is the perfect time to think about whether or not you need to break up with your accountant. Because
Yes.
because I always tell
Immediately,
people
yes.
is if you're trying to work with your accountant and you don't feel like, the relationship actually make sense. Like the person isn't able to answer your questions, isn't able to really help you. I think February 14th gives you enough time to make a change so you can still get your tax return filed. Because what I find is
Ooh.
a lot of people that I talk to is they get to, the tax deadline, they get, to like I say, beginning of April, and they're like, my tax accountant has had my stuff since January and they still haven't done anything with it. I'm like, if they got your stuff in January, by February 15th, you should have an idea on what the game plan is or when they're going to get it done.
Yeah.
And if you need to leave them and go find someone else. Because I will say is if you don't find an accountant before, let's say, February 14th, you're probably going to be paying a lot more money because the accountant that you do find later is going to be busy, which means you're going to have to pay a premium to get them to work you into their process. So I would
Yeah.
say is at the very latest, try to have your accountant that you are going to work with by February the 14th. Um, if the sooner the better, but don't push it past February 14th because the next official deadline is March the 15th. So if you're a partnership or you're an S corp, your tax returns for your partnership and S corp are due by March the 15th, which means, let's say if you realize like, hey, my accountant sucks, I need to find somebody new. Or maybe the unfortunate thing of, hey, my accountant got sick and my accountant can't actually, follow through on my tax return.
Mm.
Then what you can do is you got between February 14th and March 15th to find a new accountant and get your partnership and your corporate tax return filed. And you definitely want to make sure you don't miss that deadline because it is an important deadline that a lot of people don't tend to think about because April 18th is the main one that everybody talks about. But March 15th, a month before the tax payment is due, for partnerships and S corps. It is a very important date. You want to make sure you get those taxes in.
Yeah, no, that's good. And I was gonna say, I think jumping a little bit to the last tax return deadline we have, I think is the point I'm gonna make here, which is the fact that a lot of times I've seen situations where, like the situation where you mentioned, where the accountant will not, they have all the information they need in January. It's been a month. They haven't communicated with the business owner about what the status is, or they have no sort of guidance on what the plan is, what we're doing next. And I've also seen some situations in that situation where the tax accountant just extends the deadline, like basically files for an extension. And that extension, at least for 2023, is October 16th. The challenge that with that, and I think this is very important for business owners, is to realize that if your tax accountant, well, first of all, they should talk to you and consult you before they file a tax extension. I mean, that makes sense. If they are not doing that, that's a problem. But if you're filing a tax extension, recognize and realize that that doesn't necessarily mean that you're not going to be liable for whatever you owe in taxes. So if you end up owing money at the end of the filing period, you're going to have a penalty to pay for from the date the tax return was due. So if it's March 15th if you're an S corp, or if it's April 18th, whatever that date is, from then to October 16th, you're going to have to pay the penalty for that delay if you owe the IRS. If you don't owe the IRS, then you don't have that penalty. But I think, Terrell, that's something important to mention, because I think sometimes people just be like, oh, I'm just going to file an extension. I'm just going to file an extension. And I'm like, yeah, that works. And if the opportunity is afforded to be able to do that in circumstances where, for whatever reason, you can't have your tax return completed on time, but just recognize that there are going to be penalties associated with that if you owe taxes to the IRS when everything is said and done.
Absolutely. I mean, and the IRS may charge you penalties and interest for every
That's true.
day that you're late because
Yep.
in the eyes of the IRS, like your money that you owe the IRS is due by April the 18th. Even if you
Mhm.
file the extension, your money is still due by April the 18th in the eyes of the
Yeah.
IRS. And so I do think that, keeping in mind these deadlines, I think are a phenomenal thing. Even just go ahead and mark it on your calendar of,
Mhm.
hey, January 16th, I need to get my fourth quarter estimated taxes paid. By January 31st, need to get 1099s and W-2s out. March 15th, partnerships and S corporation tax returns need to be filed. By April 18th, you need to make a payment for whatever you're going to owe, file an extension, or file the actual tax return by April the 18th. And
Mhm.
if you can hit those dates, I would say is you're going to lower the issues that you're going to have with the IRS. Now, I know a lot of
Yep.
people have filed, extensions or they got delayed. And for some people who may have been looking for a refund, like that thing has been delayed. Like it's been
Mhm.
taking much longer. So it is in your best interest that I always tell people it's in your best interest to get it done timely. Now, I will give a caveat because this is something that I have seen really negatively impact a lot of businesses as to why they end up missing these deadlines. And so, well, I'll say this, Lola. I'll let you guess. You get two guesses as to why you think what is the top reason why people miss these deadlines? What's your first guess?
Their financials are a hot mess and they're not correct.
You hit it right on the head. It is because they don't have, if they're a business owner, they don't have the financial statements ready to actually file the tax return. Because when it
That's
comes
kind of
down
important.
to a business, like, for example, if you're a partnership or an S Corp, one of our clients that we've done some consulting with, and they had their own accountant, they had their own bookkeeper. We had done some consulting with them on some pricing strategies and stuff, and they ran into that issue where they ended up having to file an extension because the company that was doing their tax return couldn't get their financials done so they can actually get the tax return done. So they missed the deadline for their S corp, and then they missed the deadline for filing their personal tax returns. And the whole process, they're still waiting for things to get processed because they ended up having to send in a paper copy because it was just a
Mm,
mess. And so one of the things
mm-mm.
that I tell, a lot of business owners is start working with your bookkeeper now and start asking your bookkeeper to communicate directly with your tax preparer, because if they can provide your business tax return or your business financial statements fast, and I would say preferably by the by mid February at the latest, they should be able to provide those financial statements to say, hey, here's what your financial statements were for 2022. That way your tax accountant can do what they need to do to make sure you hit the proper deadlines that you need to hit. Because I'm like, if you have messy books, I've just seen too many companies that are struggling because one is they either didn't hire a bookkeeper, or the bookkeeper they had was crappy, or they tried to do the bookkeeping themselves. And there's just a lot of stuff about bookkeeping that they just didn't understand.
Yeah, and I will say waiting until the end of the year to do your bookkeeping, not a good idea. Especially if you have a business that you're running day to day that's a significant transactions, lots of in and outs. Like, I don't recommend it. We have charged people thousands of dollars to do full year financials for them because A, like you said, Terrell, they didn't have a bookkeeper that they were using, or B, someone did it for them and it was completely wrong and it didn't make sense and they were frustrated. And so I don't recommend waiting. Have that conversation. Once you identify that bookkeeper or that accountant, connect them relatively quickly in the process with your tax accountant. So they're talking throughout the year as needed, and really making sure that that's that open line of communication. Because honestly, like taxes is one thing you don't want to have cause an issue in your business.
Yeah. I mean, I totally agree. I mean, it's part of the reason why in all of our, kind of client engagements for all of our clients, when I started having those conversations with them, I realized that was a big pain point for a lot of business owners. So we include in there that, hey, we actually start emailing your tax accountant back in September. For some clients, we started emailing back in July of saying, hey, here's what the client's financials look like as of July.
Mhm.
What
Mhm.
tax advice do you have for them before we get to the end of the year? And
Yep.
then we do a similar thing when you get to September. And so by the time we get to January, the financials, the tax accountant has had the opportunity to see them a couple of times so that
Exactly.
they can give the best advice to the business owner. And we
Yep.
find that by doing that, a lot more business owners are seeing that and they're like, hey, we need you guys to be our bookkeeper because our current bookkeeper isn't doing that. Like our bookkeeper and
Yeah.
our tax person isn't really talking and communicating. And when we start doing that, it really changes the game. And I think another piece too is that a lot of times people are like, well, I'll just pay my tax person to put together the financials. What they don't realize is you're paying a premium often to get your tax accountant, your CPA to do your bookkeeping. And I'll be honest, most CPAs that focus on tax, they have no idea what they are doing when it comes down to bookkeeping.
Mm.
Because I have seen many reputable tax accounting firms that they put together the financials for a client so they can get the tax return filed. And when I go look at it, I'm like, they made so many mistakes. Like this doesn't even make sense. So I always say is you want to make sure that you're proactively working with a good bookkeeper. And if you're going to do it yourself, I always tell people like, hey, at least get some, advice from a good bookkeeper to point out some things that you want to keep in mind because, you know, bad bookkeeping can turn into a tax nightmare where you end up paying more money than you should. You end up getting penalties and stuff. And I'm like, that could be avoided with better bookkeeping.
I agree. I fully agree. Fully agree with that statement. All right, I think we've done enough on taxes. I'd like to move on to the next event that business owners need to be prepared and or plan for. Um, and this topic, I think, is I I was gonna say before we move on, I want to say that I think when it comes to in the beginning of the episode, we talked about just the excitement of taking that trip, getting to your destination or getting to the airport and realizing that you missed something very important. I think when we give the advice that we share on the episode, Terrell, like one of the things that I think about and I always go back, like even as we talk about this in the small business CFO, is the importance of always going back and linking like these tips and these things that we're sharing, like linking them back to why this is important and why this matters. So like for the tax deadlines, we're not just sharing these because, hey, I mean, yes, it's important to have them, but really understanding that, like we've talked about, the tax deadlines are there for a reason, and not having them can drastically change. First of all, not having idea and working to make a plan to make sure that you're hitting those deadlines or rushing to hit those deadlines can definitely put your business in a position where you don't have the right financials or stuff's not done correctly. You end up having to pay a lot of money, which impacts your profitability. And so you just want to avoid that at all costs. So that's kind of one thing I wanted to say before we wrapped up that specific tax topic. The second thing I want to talk about is just when it comes to planning for events for 2023, a big thing that a lot of business owners are care about and focus on is when it comes to planning for industry events and just different activities of where basically business owners can meet their potential customers. So for example, I'll just talk about for lawyers because that's our, those are the clients we serve. So like the Clio conference is a big, I guess, event for lawyers. What are some other ones, Terrell?
Yeah, so the American Bar Association, they have the tech show, which is
Yep.
in March. Some of the state societies, like the state bar associations, may have events. There's so many different like coaching, communities where they also have conferences and events. For accountants, I mean, there's all of the major software companies in just
Mhm.
about every industry are hosting some type of industry specific event.
Yep, agreed. And I think the reason why we're sharing this is, I mean, all the deadlines vary depending on your industry, right? So, like for example, for us as accountants, we have the QuickBooks event. We have the what's the other one, Terrell, that I'm now
So
forgetting?
you got, I mean,
Zero.
you have Zero, you have, the QuickBooks conference.
What's the one that
You
starts with
also
an
have
S?
like payroll companies like, Gusto has
Mm-hmm.
their events. Sage Technologies, they have their events. And I'm sure there's some of the other vendors that are out there, like FreshBooks has events. And what some companies are doing is they're actually doing road shows where they do smaller events in like
Mm-hmm.
5 major cities, and they're constantly moving around. The AICPA. So there's a list of different events, and most people think that, oh, the events, these trade shows and stuff are going to happen at the end of the year. There are a lot that happen throughout the year. And
Yep.
I think that there's a lot of value that can be gained from going to these if you plan ahead for it.
Yeah, no, I agree. And I think also I think there's monetary benefits and non-monetary benefits. On the monetary side, I think it's just depending on what industry event you're attending, you may have your potential client or customer base there. So it's a good opportunity for you to maybe find a way to market your product or your service at that event, whether it's, hey, buying a booth or buying a stand where you can promote your services. Like those things are going to cost money, which is why I wanted to talk about this, Terrell, because those things cost money. And I think a lot of times, if I go back to, again, this podcast is talking about, hey, the secrets and the strategies that big businesses use to increase their profitability. There are completely different departments that are on the commercial excellence side that just plan a lot of these events and coordinate stuff to go out to meet potential clients, to promote their products and stuff like that, that work with the sales team to do that. If you're a small business, you don't have all that. But what you need to do is make sure that you're planning to say, okay, these are the 5 events that I know that I want to attend where, hey, I'm going to A, either meet my potential client, or B, there's going to be massive value in just networking and connecting, whatever the goal is. I think it's important to kind of identify the list of those events you want to attend and then think about a plan for each of those. Hey, what's the goal I'm trying to achieve and accomplish? What is the budget? Because I think this is where the financial piece comes in. How much money are you willing to spend at this event? Because then that's going to help you determine and plan properly for that. And then I think the last thing with that is not only how much money are you willing to spend, but what's the expectation? What's your ROI? How much are you wanting to walk away with from whether it's monetary benefits where, hey, I want to walk away with maybe 1 or 2 leads or 1 or 2 new clients, or hey, there's some sort of non-monetary value. So what's kind of your take on that, Terrell? Just anything else you want to add in that?
Yeah, when it comes down to industry events, I do think it becomes a challenge for small businesses to really wrap their mind around it, because I think when you think about big businesses, so let's say, for example, when I worked for a company that was in the aerospace, they would go
Mhm.
to the air shows in Europe, and there a lot of their customers are going to be like the major airline, CEOs and presidents and
Mhm.
directors, and they're all at that show to see what's the new airplane technology that's coming out.
Mhm. Mhm.
And so the salespeople for our company could meet with them, take them out to dinner, grab a few drinks and talk about some of the deals that they were going through. Now, when you're a small business, a lot of times, like, that isn't necessarily your direct experience when it going to a trade show. And so I always tell people is that, even for us, when we go to trade shows and events, one of the things that became helpful is we figured out, like, hey, what trade shows do we go to? Because we want to get around some of our peers and people who would, in theory, would be competition, to
Yeah.
learn from, hey, what are they seeing? What are they doing? What's going on with them? How can we, find ways to partner with people in? And I think for us is, as we got very specific about who we help, like we help law firms. One of the things that it allowed us to do is when we would go to these accounting conferences and we're talking to other accountants and they ask, oh, what do you do? We can say, hey, we provide bookkeeping and CFO services for law firms. Like,
Mhm.
and what we ran into is that a lot of those other accounting firms like, "Oh my gosh, like, man, that's really good. I didn't know anyone else that does that." And several of those people have sent us referrals
Mhm.
where they sent us referrals saying like, "Hey, I heard of a law firm needed a bookkeeper, so I sent them your way." And I
Yeah.
think that was one benefit from going to some of our industry where we're going to be there with peers and competitors. Now, we also took a step back and said, since we know that we focus on law firms, let's go to law firm conferences,
Yeah.
conferences where we may be one of, I think the Clio conference when I went, I met maybe five other accountants or bookkeepers there in a room of over 5,000 law firm owners and law firm leaders. And I'm like, this is the perfect place where you want to be because all of our potential customers are here.
Right.
And that gave us a chance for that type of conference. We focused on, hey, we're going to develop relationships that could lead into, further business. And,
Mhm.
we're in talks of closing some deals from like one conference I went to. I mean, between the conference ticket cost me like $600. The flight was maybe 400, and then the hotel was maybe another $700. But from that, the clients that I'm, in talks with closing a sales deal, that could be a $25,000 per deal that I close, which I would
Mhm.
say is that was a good investment, to
Yeah.
spend a couple thousand, like to spend like $2,000 and 3 days. And usually at a lot of these conferences, you're gonna have a really good time. Like the conference I
Mhm.
went to, like they rented out the Grand Ole Opry and had like a private, private concert at the Grand Ole Opry. Which, if you're in the country music, the Grand Ole Opry is like it is like the big times. If you have performed at Grand Ole Opry, like that's big time. And so
Yeah.
they rented out the entire place. And so I do think you get that benefit of learning what's going on in the industry, learning from your competitors, getting it, being able to get around your potential customers, and just have a good time as well.
Yeah, no, that's really good. I like the point of positioning yourself, like going where your clients are. That's a really good one because and I don't know, maybe just my perspective on where I'm like, hey, like if I can go meet my potential clients and develop these relationships, well and good. But I will say, to be honest, it was definitely fun attending a conference where we had our peers and I was able to meet people where I'm like, oh my gosh, like you're an accountant too. Oh, I'm an accountant. Like, where it's fun when you have that level of interaction. One thing I will say on this though, Terrell, is you were talking about just the difference between like big businesses and small businesses. And, a lot of times small business owners really struggle to kind of wrap their head around like these trade shows and things like that. Is it's okay. It doesn't have to be like on the big national scale, like large companies like that. That's not the only thing you have to plan for. A lot of times there are a lot of business expos and different things like that that are within your own city. So, like for example, for us, we live in the city of Charlotte, North Carolina, in the U.S., and there is a lot of business entrepreneur leadership expos, conferences, different things like that, to where if especially if you're B2B, like that's a great place to go to meet people. Hey, potentially consider, maybe it'll be cheaper to rent a booth there on a place that's, in a city that's a bit more like smaller, or the audience is a bit smaller, so you don't have to invest, a lot of cost. So I would definitely say my advice to a business owner would be, don't feel like you got to go big in the first trip. And in the first, event that you're attending, like work your way up there. Like Terrell, you gave the example just now of, hey, we invested 2 grand, and now for the deals we have, we're at $25,000 potential for each deal and for each person that we met there. And so I would say, don't undervalue the experiences that you get by attending, but also don't, because I think sometimes people will undervalue it because they feel like, man, I got to do like this $20,000 booth there. I got to have it all set up, do all this, boom, boom stuff. But really, sometimes it's just about developing the relationship. And sometimes developing the relationship doesn't cost a lot of money. And so I would just say, don't despise the small events, and don't despise, just really keeping it simple, because at the end of the day, it really is about do you connect with your customer?
Yeah, and I would say is I've never rented a booth or sponsored a booth at any conference I've been to. I mean, I went
Yeah.
as an attendee and just, I had a good time and met people, had conversations, and talked to different people.
Mhm.
That because I think that networking is a game changer for any small business. Because I think that is something that I find that small business owners don't do, but it is a secret to greater profitability, and it
Mhm.
is networking, having conversations with other peers, like even people who are within our industry. Because we've had some other accounting firms send clients our way is because we are very clear about, hey, we work with law firms. Like we
Yeah.
know how to do bookkeeping, CFO services for law firms. So other accounting firms who may only do tax, or other accounting
Mhm.
firms who may work with other industries, what they do is they send clients our way is because we have that relationship with them. And many of them, I met them at a conference or something like that. And, so I do think that you can go the route of renting a booth, or you can go the route of just going and getting out there, shaking some hands and meeting some people, and even just learning about it. Because one of the big things that's happening at a lot of these industry events is that they're going to have, some of the latest and greatest technology within your industry that will be
Mhm.
there. And that
Mhm.
becomes a really good thing because you can find out, hey, what new tools should you and your team be adopting? And I think that one is starting to become a very common thing across every type of business or every type of industry, is where they are having more and more technology, because technology is just massively changing how we do business altogether. And you don't know what is good until you actually just go out there and see what are other people using, what's available, what makes sense for you. And I think you get a shortcut of that at a conference, because you get to go see the five vendors who all do the same thing. You can talk to them back to back, and then you can easily compare which one actually is better, as opposed to having to wait and do like a demo over like a 4 week period. You can get it all done in a matter of like an hour.
Yeah. No, that's good. I think I agree. It's also an opportunity for you to try new products that are new in the industry. And just one last point I want to make on this before we move on to the next topic is, or the next point is, I think having really being niched down, like and understanding who your target audience is, will make you not afraid to go to some of those conferences where you have your competitors or people that are in the same industry as you. Because I think what that does is it really helps you understand. Or what I will say I've taken away from attending those conferences is a point that you made earlier, Terrell, where you said, "Hey, a great thing about these events is you get to learn what other people are doing, right? And you get to learn the not just what other people are doing, but the tools and resources you mentioned as well." And I think it's really a good way to kind of say, okay, let's go back and kind of understand, how do we tweak our strategy? How do we tweak some of the things that we're doing? So definitely encourage anyone that hasn't to consider attending an event where they are attending an event with people in the same industry as them or their competitors, whatever, however you want to name that.
Absolutely, absolutely. And as I said earlier, I mean, it's December the 29th, and the year is wrapping
Now, when
up.
they're listening to this episode, no, but it is
Well, when I
December
mean,
the
when we're
29th.
recording,
Yeah.
so in respect of the time, I want to say, can we hop to the tax T, and that way we can talk a little bit about the tax T, and just because when you mentioned it, like COVID related fraud, we were talking with a friend the other day, and there are so many business owners that got themselves caught up in this. One is because they were
Mm.
they didn't realize that they were doing something wrong.
Well, this man
And
realized. This man knew. I'm just gonna tell you this now. He
but I
knew.
do think,
But go
but I
ahead.
think even in the people who are doing stuff intentionally, there are some people that I met that they've done some of the same things that these, the fraudsters did. They just didn't realize that what they were doing was wrong. But I'm
Yeah.
just like, hey, we need to correct this, because if you get caught, they may not accept the fact of like ignorance is not a defense
Nope.
for breaking the rules. I mean, it's one
Nope.
of those things that I have to tell people is that ignorance is not a defense when it comes down to the IRS, when it comes down to government agencies. Now, they may be a little bit more lenient on the penalties that will
Mhm.
come down, but
Mhm.
saying that you didn't know as a business owner is not a justifiable defense to allow you to not have to suffer some penalty. So I wanted to make sure we definitely talk about that before we wrap up. So I'll let you bring in the tax tea.
Yeah, so on this week's tax tea, we're talking about a gentleman, and this is why I say that this was not a situation where he did not know what he was doing was wrong. To your point, when it comes to COVID-19 fraud or issues, I think a lot of, especially with like the EIDL loans, which we'll talk about, I think let me look this up, economic injury disaster loan, where people were taking money and there were certain criteria that had to be met for you to qualify for these loans. Um, I think some business owners just didn't really know or they were ignorant. So they made mistakes and they applied for it. They got the money, they had to pay it back, whatever. In this case, this gentleman was convicted. Like you said, Terrell, I think in this case, definitely the sentence is lighter than situations we've seen. So in this case, his punishment is 1 year of probation. I'm not really sure what the probation entails, but he does have to pay back all of the money that he was given under the IEDL loan. So he has to pay back the $117,000, which was the amount he took. And so basically what happened in this situation is this guy was overstating. He basically was cooking the books. I mean, I'm just going to put it like that. So he was overstating his revenue and he was understating his expenses. He lied on his financial statements, made up. He basically was playing. I don't even know what the right word is to use, but he was making up financial statements. He was cooking his own books. He basically reported false revenue. He reported revenue that didn't exist. He excluded some of the transactions he should have included in his business. But it was just really bad. And basically, of course, the accountant did not play a role in this because the accountant did not exist. He was the accountant. And so, yeah, I mean, this situation was just really, it's very simple. He was not ignorant. He intentionally fabricated his financial statements to basically qualify for the EIDL loan. Qualified for the loan, got payouts of $117,000. The IRS found out, and now he's going to be on a year of probation, which I'm not really sure what that means. And then he has to pay back the $117,000. So I think whatever timeline he had has been revoked, and he has to pay that money back,
Wow. I mean,
probably with
and
interest.
that's, I will say that is unfortunate that, you know, one is that a person would do something like that where it's like they would intentionally fake the financial statements and the financial reports to qualify for the loan. And while this person did this intentionally, one of the things that I saw from a lot of small business owners is because they didn't have a good bookkeeping process when it came
Mm,
down to filing for loans, or even when it came down to filing for grants where financial statements were required, is they ended up making up some of the numbers because they hadn't been
actually, yeah.
keeping up their books. And
Yep.
so they were like, well, I think the numbers are this, I think the numbers are that. And they started kind of making up some numbers.
Yeah.
And the thing about it is, if their numbers ever got audited, they would not be able to support it, which in the eyes of the law, it would look very similar to this guy that had fake
Pretty much.
financial statements to secure
Pretty
a
much.
loan, which is
Yeah.
why I always tell people is that, you know what, sometimes when it comes down to, some types of crimes, when it comes down to some crimes, like when it's in a criminal court, like intent may be part of what has to be improved. Like, hey, you intended to
Mhm.
wrong someone, or you intended to defraud someone. And I'm like,
Yeah.
for some of things related to finances, and when it comes down to loans, when it comes down to taxes, you may not have intended to defraud the government, or you may not have intended to give false statements or false information. So when the IRS finds out, they may not necessarily, throw the harshest penalties at you, but you still are going to get a penalty. Like, you're still going to have to pay the money back. You still may get a penalty. You may even get charged interest, and it may become public that you have been found, you're being investigated or you're being reviewed. So, I mean, imagine if you're a restaurant and
Mhm.
you are being investigated for, by the IRS. When that news becomes public, like, people aren't going to really sift through it and say, well, it was an unintentional mistake that was made. It was something
Yeah.
minor. People are
Yeah.
just going to hear you're being investigated. And that becomes very important because let's say, if you're a dentist or you're a doctor, let's say if you're a lawyer, let's say if you're an accounting firm and you are getting you are
Oh,
getting
that's the
investigated
worst.
by the
Yeah, that's the
IRS,
worst. Yeah.
like, that kills your reputation. And some
Yeah.
of that stuff could be avoided because some, before the IRS just jumps into an all-out investigation of you, there are some, letters that are sent requesting information. And the problem is if you don't have the backup or the documentation to respond immediately or pretty quickly after you get the letter, then what ends up happening is you could find yourself having to go through an investigation because you couldn't find the data to respond properly. And that's why I'm like, you know what? You want to make sure that you have good bookkeeping practices. You want to make sure that your financials are reliable and they reasonably represent the reality of what happened with your business. And you can
Mhm.
get that working with a good bookkeeper. And then when you're working with a tax preparer, it's just making sure that they're giving you, some good, solid advice, like not just telling you what you want to hear. Because
Yep.
I think that there are so many businesses that are trying to do the right thing, but unintentionally making some of the same mistakes that guy made. And if they get caught, it's gonna reflect negatively on them and their business, even though they didn't intend to do the wrong thing.
Yeah, no, I agree. And like you said, it's not about intent. The fact is you did what you did. And um, I mean, listen, I hope he has $117,000. I hope he has it because if he doesn't, I mean, can you imagine? Now you got to pay the IRS that money back. You probably already spent it on something else. So, anyways, what this just means to nicely cap up what Terrell said is just make sure you're working with the right accountants. Don't work with someone who's shady, or hey, don't take it upon yourself to do something when you don't know like what you're doing. I mean, I think it's extremely important to invest the money in paying somebody that knows what they're doing. And like we talked about, February 14th is a really great time to evaluate the relationship with the existing accountant that you do have, because you want to make sure that you're being treated properly and you want to make sure that people are doing the right things. So, yes, that wraps up our tax tea for the week. And that wraps up our episode for the week. Thank you guys for tuning in. Until next time.